Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. It is Wednesday, 26th of October, 2022. Not sure I've ever seen this before. NASDAQ futures down more than 1.5%. Russell is up. Small caps are up this morning, even after Google and Microsoft soiled themselves in their earnings reports last night. You may recall that I suggested small caps might be the way to play the bear market rally if one was so inclined. We do own some IWM, but they're less affected by foreign exchange. They are cheaper versus large caps, but they also are the first to recover in a cyclical sense as you come out of a bear market. I think that trade is too early to think about, but nevertheless, here they are, looking up so far in a down tape. Oil service, you've heard me talking about that. I think I've mentioned it every day since last Friday. Again, Wells Fargo upgrades Halliburton this morning. Hold to buy, $52 target on Hal. Stock looking up this morning. You know my thoughts there. I think that's a smart way to play things going forward for some exposure to energy. Not as sensitive to crude pricing, and I think they are at the early stage of a potential multi-year recovery. There's a trade coming back here. Worked really well the early part of this year. Might work well again going into the end of the year. Who knows? Long commodities, short tech. Copper, oil up. Steel quietly been making progress. Look at Steel Dynamics, STLD. Look at Nucor, NUE. Cleveland Cliffs, nah. But those two doing well. We are uninvolved. But just pointing it out, copper is one I'm going to scratch my head over. China just like they don't give a crap about growing. So I don't know. The copper trade is a little elusive to me so far. But Texas Instruments seeing softening in demand in the industrial end markets. That's new for them. That's a little concerning. So you've got to be very careful of anything cyclical out there. It's too early for the broad cyclical trade to be put on. Absolutely too early. Speaking of cyclicals, semis, you had Hynix. That was Texan we were talking about. But also in semi-land, Hynix came out, slashed CapEx the most since 08-09. They're a big DRAM manufacturer. I think they're South Korean. But that's not good. That's not good for semi-capital. So Lam Research, I think, is a supplier into them a decent amount, but so that'll weigh on sentiment in semi-capital a little bit today. I do still see that baton being somewhere. There's a place to capitalize on semi-capital in front of semis. I've talked about it because of the spending going on largely in this country, the reshoring, manufacturing, the CHIPS Act. I do think there's something to do there. I still think it's too early. There's something very important happening that you need to be cognizant of, in my opinion, if you are a fiduciary. Google and Microsoft are large portions of the S&P 500, as is Tesla and Amazon and whatever. These could, at best, be dead money for the next 12 months. You need to ask yourself, is passive investing, indexing, really the best way to manage my clients' money? I know it's been all the rage with the easy monetary cycles, but that's over. Those days may be over for a decent amount of time, who knows? But at the least, I think you've got to find, in my opinion, I think it makes sense to find a way to incorporate some active management. This is going to continue to be a stock picker's market. I know BlackRock ETFs are real easy and cheap, and you're never going to get fired for being in BlackRock. Hey, we're in BlackRock. I think it's a coward way out. I really do. I just do. It's kind of I don't know why anybody would pay somebody to put them in BlackRock ETFs. So that's all I got to say about that. Tech is likely not going to be the leader in the new bull market. That's kind of how these things, the late great Tobias Lefkovich used to always talk about. The sector that led in the last cycle is typically not the sector that leads in the next. So if you want to buy the dip on Google and Microsoft right here, be my guest. We will not be doing that. But more importantly, if you do need assistance, you do need help in active management, that is what we do. It is what I have done for over 20 plus years. I am a firm believer that is the way to generate wealth, period, when it comes to the market. So reach out. Let's have a conversation. Other than that, best of luck today.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs can mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.